buying or selling a home, you need to understand about closing costs, what they are, why they matter, and how to prepare for them. Today, I'm bringing on one of my favorite lenders to explain all of that. So let's get to it. Today, we're getting into everything you need to know about closing costs, and I have the pleasure of speaking with an exceptional lender, one of my favorites, Paul Olbrantz, who brings a wealth of knowledge and dedication to his work. Paul graduated top of his class with both a bachelor's and a master's degree from Golden Gate University in San Francisco, and he further specialized with a master's in taxation. However, Paul's passion for helping people led him to a career in lending. Alongside his wife, Danielle, they own Clear to Close, a mortgage company committed to offering the best rates with exceptional service. Please join me in welcoming a true expert in the field. So, tell us, what are closing costs?
Great. That's a great question. And truthfully, this is probably, one of the most confused things because people assume that the lender has all the closing costs. So when they shop closing costs, they go lender to lender asking what your closing costs are. But to really make it simple, I'm going to break it down. It used to be 3, but now it's going to be 4 main components. And, the only thing that the lender controls is what's called the lender fee. It's going to be called the underwriting fee. It's underwriting, it's processing fees, and typically they're a very, very small portion of the total loan cost. It's typically between $1,000 to $2,000 on the lender. And so that's really the variance you're going to get. Now, we're not going to talk about rates and discount points yet, but the second part is going to be third parties. And these are things that the majority of the time, the buyer, if you're buying a house, doesn't really control. Their title fees, their appraisal fees. And so at the end of the day, those fees are going to be not fixed. They're going to be same for whatever lender a buyer chooses. The third fees are going to be prepaids. These are things like property taxes, homeowners insurance, prepaid interest. Prepaid interest is basically interest that accrues from, it's simple, the day you close your loan to the end of the month. So it's going to be depending on if you have 5 days to the end of the month or 25 days to the end of the month, that's going to dictate your prepaids. And so going back to that comment of at the end of the day, when you buy your home, you're going to have the same insurance, same property taxes, you're going to close the same date. So those two are going to be similar same regardless of what lender you choose. Now, the fourth one that's coming up is the buyer agent fees. And this is something I think we're going to dig into a little bit, but typically those fees run between 2.5% and 3%.
Okay, yeah, we will get back to those buyer agent fees and how that changed a little bit further in the video. But now let's go on to the next question, Paul, and that is, what challenges do families face when shopping for the best mortgage as it relates to closing costs?
Yes, and this is tough. So we're not licensed in Tennessee, and my cousin Matt, who was buying a house in Tennessee, called me up, and he was very confused on which lender he should choose. So I thought this would be a great opportunity to figure out how to help him out. Here's what I noticed, and this is the challenges that you're going to face. Number one, not one of the lenders that he was choosing from, there was 3 lenders, had the same property taxes or insurance. So remember, at the end of the day, regardless of what house you're going to choose, you're going to buy, you're going to choose the homeowner's insurance and you're going to choose the property taxes. So they're all going to be same. So you can't really base it off who's got the lower payment. Secondly, what I've noticed, the third-party fees. Especially if you're using like an out-of-state lender, they don't know truly what the title fees are going to be, what the appraisal fees are going to be. One of the people that he was shopping with, they were let's just keep it. I think it was Iowa was the lenders was from. And in Iowa, the appraisal fee was like $300. Well, here's the thing. Here in California, that appraisal fee is going to be $650, $700. And so not knowing the market, they are underestimating about $300. So the challenge is to get those accurate fees. So it's hard. You can't go off who has the lowest payment, and you can't go off who has the lowest cash to close because you're getting so many conflicting pieces of information, right? So my recommendation is there's really three things that I would be shopping for as a family when it comes to a mortgage. Number one it's going to be the interest rate and discount points and lender fees. Those are three things that can be controlled or can be compared right away to see who's got the best fee structure and rate structure.
Hey, and bringing up those out-of-state lenders and things, I think a lot of buyers aren't aware that it's really important which lender they choose. It makes a difference when they provide an offer to a seller that the listing agent that is representing that seller knows that the lender is reputable and is going to make this deal go through.
Absolutely. And here's why, though, going back to that rate and discount point thing, you would be surprised, Karrie, how many lenders, when they pre-approve somebody, they give rates that aren't real, that they're underinflated. The reason they do that is because they don't want you, the family, shopping around for other mortgages. Another misconception on that, and this gets to the point of why listing agents want to work with people they've worked with and local agents, is one thing that families get confused on is if somebody quotes you a rate at pre-approval, they think that's the rate they're going to get. But that's not true. Rates change on a daily basis, hourly basis. You can only lock in an interest rate once you get into contract. So here's what happens. You're working with a lender. They're quoting these amazing low rates. You get into contract. Next thing you know, you see this rate that's 0.75% higher than what you've been looking at. And they blame something. Oh, it's the market. It's this. So what happens? Either the family has a choice. They can accept that higher payment and just bite the bullet, or B, they no longer fits in their budget, and so therefore they back out. And so as a listing agent, you want to make sure, that's why they do that doesn't happen. You'd be surprised how often that happens. It's absolutely insane. Yeah.
My next question is just, how are closing costs calculated?
Awesome. That's an awesome question. So when I say fixed, they're going to be relatively the same regardless of what purchase price. You have appraisal fees, you have lending fees, and escrow fees. Now remember, I'm combining escrow fees. So when you work with a title company, they have a fee for participating in the transaction. Then they also have what's called lenders and owners title insurance. Those things, title insurance and prepaids, are the things that are going to fluctuate depending on loan amount, purchase price, etc. Same with prepaids. We kind of talked about the prepaids already a little bit in terms of interest, but what about property taxes, right? So property taxes, when people look online and they'll look at a listing, say on Zillow, they go, oh, I really love this house, and Zillow has this payment that's calculated. Zillow uses the old taxes more often than not, or they use the property taxes that the current seller has. But here in California, what happens is once you close on your new home, that property tax is recalculated, and what lenders use is 1.25%. So depending on the sales price is going to dictate your property taxes. Which, by the way, going back to shopping with outside lenders, so in some states you do use the seller's property taxes. This gets transferred over to you, but not here. What else is there here? Homeowners insurance is a huge variable. Here in California, it could range from, I used to say $100. That's just not true unless you get in a condo. But it could be up to $400 depending on where your house is located. And those are things that could really impact that cash to close.
On to the next question. Tell us about some common misconceptions.
Oh, I love this one. So one of my favorite misconceptions right now is what's this called? Hey, if you close with us, we'll give you a free loan or a free refinance. Let me define what these lenders are talking about with free, because remember, the majority of the closing costs aren't theirs, right? So they can waive their $1,100 processing fee, which is great, but people assume when they hear free loan, there's no title fees, there's no appraisal fees. So who's going to pay for that? Because those are real third-party fees. So what typically lenders do is they increase your rate to cover those closing costs. So it's a little bit more than we can get into here, but I'm telling you, nothing's free in this world. You want a combination of, and sometimes, by the way, I'm not saying increasing your rate to cover your closing costs on a refinance is a bad thing. Sometimes it's a great strategy, but you deserve to know what your options are and not have it be called a free refinance. You deserve to, understand the dynamics of a loan. Another misconception is that closing costs are 3% of the loan. Let me give you a wild example. We talked about some of them. Some of the closing costs are fixed costs. If you bought a house here in, I don't know where you can buy $100,000 house, right? But if you bought $100,000 house here, using that 3%, you think your closing costs are going to be $3,000. That's just not the case. You're still going to have homeowners insurance. You have all these other fees. And the same is if you were to buy, a $2 million property. It's not going to be, I think it's at 60,000. Am I doing that math right? I'm not a great math person. I usually use my calculator. But it's not right. It's not true. The best thing you can do is just reach out to a lender and get just what's called you get a loan estimate. That's not the word I'm looking for, but we do what's called a hopes and dreams conversation where we'll give you a breakdown of all the actual costs. Because here's the thing, it doesn't benefit me or you to underinflate the fees, because at the end of the day, they're going to come there. We want to make sure that we prepare families for what the actual costs are. The last thing is going to be, can we roll the closing costs into the mortgage? Now, this is a little bit of a tough conversation because, people say yes or no to this, but the truth is you really, on a purchase, you don't roll the closing cost into the mortgage. However, what some lenders do is they'll increase the loan. So let me give you a real quick example. There is a minimum down payment people are required to put down, and the loan amount can't go any higher than this. So let's use a really easy example of $100,000. So if you're buying an owner-occupied, putting 5% down, the max loan you can do is $95,000. So that loan amount can't go any higher. You have to pay your closing costs with cash outside. However, let's say that another family comes in, they're putting 15% down. So they have an $85,000 loan and on a $100,000 purchase price. But remember, the max loan is $95,000. So they can increase their loan amount or decrease their down payment, which feels like they're financing the fees, but really they're putting less money down and then paying their closing costs on the side. So I think a lot of people assume that's what they are financing the fees, but that's just not the case.
So let's talk about the buyer agent fees for a moment. And that is that with these NAR rule changes, buyers are going to have a say in what they pay their buyer agent. However, from my perspective, I will still be asking the sellers to pay for my fees because mortgages are more set up to do that right now. And we could just move on like basically the way we were before, except for it's now buyers who will be determining what they pay their agent instead of sellers defining what they'll pay a buyer agent. Is that the way you see it?
Yes. I mean, it's at the end of the day, it's going to be the same. It's just the conversations are going to be different.
Okay, I know a lot of people may still be confused about what's going on with lending or closing costs or the new rules. And I know you offer to people the opportunity to speak to you for like a 15-20 minute consultation to help them out with that. Can you tell us more about that?
Yeah. So it's called a hopes and dreams conversation. In this conversation, we don't pull your credit, we don't take applications, we don't collect documents. Utilize our 20 years of experience. Let us put that into use for you. We just have had so many people come to us doing their own research, and some of it's been great. They've done a great job, but some of it's been a little misleading or not having the full truth. If you give us 15-20 minutes of your time, we'll put an amazing plan in place for you. We'll follow up with you. We'll take great care of you.
Well, thank you, Paul, so much for coming on this today and explaining all this stuff to everybody. And if you would like to contact Paul, I'll have all of his contact information in the description below. Thank you, Paul.
Karrie, you're amazing. Thank you.
And as always, I have a bunch of free links to information that's helpful for buyers or sellers in Marin County, but also all around the United States and in 24 countries in the description below. All free, no obligation. Check them out. And if you'd like some more information about Marin County or some of these other things, there should be some videos showing right now. Thank you for watching. Oh, please subscribe and have a great day.